All right. Hello, my VitaVA friends. My name is Hammer, and it is April 17th, 2024. This is your mortgage market update where we talk about mortgage rates, what's happened the last week, what we think is going to happen this week. If you're here live, go ahead and say hello. I am here monitoring the comments. If you're watching on the replay, do us a favor. Go ahead and give us a hashtag replay in those comments. Let me know that you are here. Let Facebook and your moderators know that you're here. We do monitor the posts, so go ahead and ask any questions or share your thoughts. If you do have any questions, you can feel free to tag me, Hammer J Helmer. So if you just do at Hammer, you'll usually find me, and I'll be glad to get you an answer if I can't answer it for you. So let's start right at the beginning. Let's go ahead and jump in. Let's talk about what's going on with rates. Remember, when we talk about rates, this is not an offer to lend, and we're talking about averages and generalities. So keep that in mind as we go there. You always want to be shopping around when you do shop rates. So let's go ahead and do a quick recap. Let's talk about what happened to mortgage rates last week and where things are at. So mortgage rates did go ahead and move higher last week, unfortunately. Generally you're going to find that VA rates are in the high sixes, possibly even low sevens. Conventional rates generally in the low to mid sevens at this point, could be up to the higher sevens for some scenarios, depending on how much money you're borrowing, how much money you're putting down, and what your credit score looks like. So rates have moved quite a bit higher last week when inflation readings came in stronger than expected. We got those readings last week. I believe it was Tuesday. Let's take a look here. That was on Wednesday, April 10th. We got those inflation readings and we saw things going to pot. Markets reacted to the data by dropping the number of Fed rate cuts that were forecasted for later this year. I'm going to give you some more detail on that. We're going to kind of dig a little bit deeper. But basically, last week was a very big week for mortgage rates because it pivoted the entire belief on where the economy, the labor market, inflation, and especially the Fed are going this year. Now, entering last week, markets still expected that we would see 3 Fed rate cuts. Now, the Fed does not set mortgage rates. It's important that you understand that. The Fed does not set mortgage rates. The Fed, though, does control what they call the Fed funds rate. It's their policy rate, and it basically is the foundation for almost all the rest of the rates in the economy, whether they're going to be car loans, credit card loans, student loans, title loans. If you're borrowing money for anything, home equity loans, right? All of those are going to be tied to what the Fed is doing with that Fed funds rate. Now, mortgage rates last week, we saw a very strong paradigm shift. We had started the year when we had the best rates we saw back in December of last year. That was because markets were expecting that the Fed was going to cut rates probably 6 times this year. Now, markets didn't have a lot of reason to believe that. The Fed sure wasn't leading that. The Fed said, we're going to cut rates. We project 3 rate cuts in 2024. Markets, however, said, you know what, Fed? Hold my beer. I think we're going to see more than that. I think we're going to see 6, maybe 7 rate cuts. And I think you're going to start in March. And our March Fed meeting is now coming on, and there were no rate cuts. Our May meeting is coming up in about 2 weeks. There will be no rate cuts. Now, the expectation is that the Fed will probably not start even to cut rates, if at all, later in the year until September. So we'll talk more about that in a minute. So generally, you're going to find your VA rates are in the high 6s, could be low 7s, depending on credit score. Again, conventional rates, if you're not doing a VA mortgage for any reason, you may find those to be generally in the low to mid 7s, could be even into the higher 7s. So keep that in mind. Now, here is the forecast. Where do we think things are going from here? Unfortunately, not all that great. The expectation here is that rates may get worse. All right. Rates are likely to creep higher this week as markets adjust to the expectations that the Fed may cut rates only twice or maybe even once this year. And again, what markets were previously pricing in, was the idea that the Fed was going to cut rates 3 times this year. And as we start to expect the Fed to have less rate cuts, that has this effect here. All right. So that's kind of what we're dealing with. The strong economic and labor data, along with increasing inflation, have shelved the idea that any rate cuts will happen before September at the earliest. Now, I actually wrote this. I write this commentary, and I wrote this back on Monday. Well, what happened since then? If we take a look, I'm going to Google Powell Bloomberg comments, and let's take a look and see this article right here. And this is the one we want to kind of zoom in on, and I'll make this a little bit bigger for you. So taking a look here, this is really kind of says it all. So yesterday, Fed Chair Jerome Powell, he was in a panel discussion alongside Bank of Canada Governor Tiff McClackham at the Wilson Center in Washington. He was speaking yesterday, and he basically said that the lack of additional progress made on inflation has not been getting better in 2024. It's kind of stagnated. It's very, very small increments better, but not significantly. And he said that the lack of progress on inflation, as well as the very strong labor and economic outlook, basically make it appropriate, as is the word he used, to allow restrictive policy further time to work and let the data and evolving outlook guide us. Now, what does all that actually mean? It means that Powell basically said that the Fed is not likely to cut rates and cut their policy rate anytime soon. And expectations, if we take a look here at this little chart, this is basically handicapping when do we think we're going to see these Fed rate cuts. Now, these are called Fed futures. This is a free tool. And the reason I share this with you is not to confuse you, but I want you to see the background on why I give you the advice that I'm giving you and why we forecast the direction that I think things are going and what I'm basing that on. So the idea that the Fed is going to cut rates at their May meeting are down to almost zero. This is a 96% expectation that the Fed will remain at the 5.25 mark that it's at right now. Let me make this bigger so you guys can see this real nice and easy, right? The next thing we've got is the June meeting. So we've got a meeting comes up at the end of April, May 1st. Then we have about 6 weeks later, the June 12th meeting. At that meeting, markets believe that it's almost a shoe-in, about an 85% expectation that the Fed will not cut rates at the June meeting either. There's a small outlying chance, about a 15% probability that we could see a rate cut if we see some market weakness, some labor market weakness, some economic data that shows weakness, and if inflation were to improve. Now, by the July meeting, this is the end of July, so we can almost call this August 1st. This is July 31st. It's a 55% probability that the Fed still will not cut rates. That leaves us at about a 45% chance that we're going to see some kind of rate cut by this July meeting. And I'm going to jump forward a few meetings and go to the end of the year. Right now, we could argue that markets are pricing in 1.5 rate cuts. Well, they don't do a half a rate cut. What does that mean? It means that markets say, well, we could see 2 rate cuts, we could see 1, but those are basically the coin flip that we're leaning towards right now. And that is a big difference, a far cry from what the Fed was expecting not too long ago. And when the Fed said, hey, we think we're going to do it 3 times, the market said, we think you're going to do it a lot more than that. Let's see comments. It sucks, but the market isn't budging because the Fed doesn't feel we're in a recession yet. Rates should remain somewhat stable where we are now from what I'm gathering. That's very much the case. Let me know, who is that, by the way? Are you a consumer or are you one of our vetted VA professionals? I don't get to see your name. You just show up as Facebook user. So if you can let me know who you are, I would love to know that. But that's very much the case right now. Generally, the question that's here is people say, well, why do I want to buy a house when rates are high like this? Well, the reality is that if you wait for rates to get lower, you are probably going to be waiting for quite a while. And when rates do start to go down, there's a lot of pent-up demand. Oh, it's Jerry Avila. Hey, Jerry, good to see you, my man. So when you do see the home prices, or when you do see the interest rates get better, home prices are probably going to go up because there's going to be a lot of pent-up demand. There's a lot of people that are waiting until they can get just a little bit better interest rate, or maybe, a little more affordability, or put some more money down, not even just in the VA market, but in the full housing market, right? So when that happens, when you have more demand, that drives the price up because people are bidding and outbidding each other. And generally the way that you can win a home is to offer more money. So that tends to push prices up. And as home A sells for more, that means home B can list for more, and then home B sells for more, and home C can list for more. And it ladders up and prices go up. And that's why, it's still a fantastic time right now to be buying a home, even though rates are not where we want them to be. And especially if we look back and you say, man, I missed out. Mortgage rates were at 3.5 or 4. I mean, I wish I had enough money to buy 10 houses when mortgage rates were at 3.5%, right? That would have been a great time to buy homes. But unfortunately, it's not the way it works. The best time to buy a home is when you can afford one and when you need one. So keep that in mind. Definitely, if you are looking for some help on what is out there, check out the Vetted VA community, check out the Vetted VA website, find a mortgage professional, a real estate professional in your area that's been vetted that can help serve you and help you and give you all of your options. If you have any questions and you want an unbiased answer, of course, you can ask those in the Vetted VA Facebook group. Our moderators will be glad to answer all of your questions. There is no pressure. There is no soliciting. So you don't have to worry about somebody trying to win your business and giving you the answer you want to hear. They're going to tell you where you can find the proof of the answers that they share for you. They're going to give you some great advice. So hope that helps you this week, y'all. Keeping it short and sweet, but just basically let's end with, let me pop it back up on the screen. We'll put the next thing here. Let's see, here you go. So I'm going to pop this out of the way. We talked about what's affecting rates this week, even though I didn't highlight it. And here's kind of the forecast on where things will probably be in the near future here. So over the next 15 days, rates hopefully will level off, but they could creep a bit higher. Over the next few weeks, rates are unlikely to reach the highs that we saw last October, but they're also unlikely to fall very much from here. It's not likely over the next few weeks that we see a big move. Also, when you think longer than that, rates aren't likely to fall too much until later in the year when it becomes more likely to see those Fed rate cuts. And that's probably quite a ways off. So hopefully that helps you this week, y'all. Hope, again, if you are thinking of buying a home and you've got rate questions, feel free to post them. I'll be glad to answer them. Otherwise, I'll be back next week with some more mortgage information, more rate update information for you. If this has been a help to you, please go ahead and make sure you put that hashtag replay on there. And any comments that it helped you, we'd love to hear that. So take care and make it a great day. Bye-bye.